If your senior citizen parents don't yet have a health insurance policy, buying one such policy is the best gift that you can give to them. I'm very pleased to bring to you an interview with Dr. Bhabatosh Mishra. He is Director, Underwriting, Products and Claims at Niva Bupa Health Insurance. And in this interview, he offers very valuable tips for people who plan to purchase a policy for their senior citizen parents. Good afternoon, Dr. Mishra. Thank you for taking time out to speak to Business Standard.
Good afternoon, Sanjay, and it's a pleasure. Thank you very much indeed to have me here.
A lot of people have senior citizen parents who don't have adequate health insurance. So I thought I would ask you a few questions about the nitty-gritties of purchasing health insurance for senior citizens. So a lot of people don't buy health insurance when they are working. They rely entirely on the health insurance policy provided by their employer. Could you tell us a little about why this might not be the right thing to do?
Sure, and if I may, Sanjay, then I will treat it in two different ways. One, those who do not buy and rely on the insurance provided by their employer is actually a very small segment. As you know, people organized, working in the organized sector in India, who inherently have, let's say, quality and some level of, I wouldn't say completely adequate, but some level of adequate cover, is a very small population of India. So yes, to start with, many do not have any insurance at all throughout their productive years. Some, they do have insurance which is provided by their employer, which as such at a point in time is inadequate and going forward becomes grossly inadequate. And that's what you wanted to understand. And some very important points. One, very famous and a funny saying is, when you are healthy, you don't want health insurance. And when you want health insurance, you are not healthy and health insurance doesn't want you, right? Issue is when we grow and with aging, as you see, we are the diabetes capital of the world already almost. We have a huge burden of chronic diseases, as well as communicable diseases. But as we age and go towards that elderly years, very likely many of us would have certain health conditions. One, availability of a health insurance at that point in time becomes difficult, depending on condition, severity, etc. The second, we might have to shell out much more premium by virtue of additional premium loadings, etc., by virtue of the health conditions we'll have. That's one very important reason. While we are healthy and young, we should take it. The second very important reason is almost every health insurance policy has waiting periods. Most of the health insurance companies have no claim, loyalty, and other kind of bonuses where the sum insured increases. Even there are policies where CPI linked sum insured increase happens without any additional premium. Now imagine if I'm buying a policy at 60, vis-a-vis if I bought it at 30 and today I'm 60, I would have accumulated a sizable extra sum insured by virtue of no claim bonuses, loyalty bonuses, CPI linked bonuses, etc., for which I'm not paying anything extra, right? These are some of the very important reasons why I must have coverage while I'm healthy, while I'm young. It is much more powerful when I age, and availability access is also easier when I'm younger and healthier.
So suppose we are planning to buy health insurance for parents who are around 60 years old. How much health insurance should one buy? How much should be the sum insured so that we could get treated in some of the best hospitals in metro cities?
That's a very important question. And that's a very logical question as well, because how do we know how much is good enough? Now, the how much part can only be answered by considering few factors. Healthcare consumption, at least vast majority of that, is very local. So where we live is a very important indicator. Somebody needing in Delhi needs certainly much higher, sum insured than somebody living in Begusarai or Bhubaneswar. That's one factor. Second factor is, what is my life stage? Am I 60 or am I 65 or 70 also could have a material implication on how much is adequate. Because as we age, it is believed that a very, very significant part of the entire healthcare expenditure, at least on the inpatient side, of the entire life happens in the last few years of our life. right? So am I at 60 or am I at 70 also is an important factor to consider. The third point I would say is, am I buying it for myself only or my spouse as well? If two people are getting covered and both are elderly, of course we will need much higher sum insured than one individual needs, right? Last but not the least, I would say people have to judge adequacy also from their point of view of how much is adequate for me. If you look at some of the treatments might cost crores, but the chances of them happening is maybe less than 1%, right? A liver transplant may cost 60, 70, 80 lakhs, but the chances, the frequency of liver transplant is very low. So there is nothing called 100% coverage, but I should benchmark at maybe 98, 95% coverage could be okay for me. But certainly anything below will be inadequate insurance. And we as a country have both the problems. We do have under penetration and under insurance. Both are equal big problems for us.
So, sir, how much insurance should one buy if one is in a metro city, and how much should one buy if one is in a, say, tier 2, tier 3 city?
If a 60-year-old living in a metro city like Delhi, Mumbai, or elsewhere is buying a coverage for self-only health insurance, I would say at least a 25 lakh is what I would recommend. Somebody living in a tier 2, tier 3, tier 4 cities and town, I would say anything beyond 10 lakhs at least. Of something below 10 lakhs is grossly inadequate. For that age, I would say be safe, buy at least a 20 lakhs in tier 2, tier 3 cities, and maybe anything upward of 25 lakhs in metro cities.
So would the cover double for a couple, or?
It may not double exactly, but certainly it will be a little less than double. Because two people falling sick is not very common in one family in a year. However, as we age, that frequency increases. If two people who are above 70, either of them or both of them getting some ailment or needing admission becomes much more commoner than a 30, 35 or a 45-year-old.
So what are some of the difficulties that senior citizens typically face when they're buying health insurance?
First of all, knowing what is the right product, right company, whom to buy from, what to buy itself. A lot of policies are written in such a manner which is very, I would say, jargonized. The language is very legal. It's not easy for somebody to follow those. So many products being available, it becomes a little difficult for people to find out which is the most suitable one for me, because products have range of benefits, 20, 30 benefits. How do I judge which is important for me and which is not? These are some confabulating factors. Some extra factors are, as we age, insurers may ask for medical tests before they decide whether I'm eligible and at what terms to offer, or even to offer me a policy or not. That becomes a little challenging as well. Above all, I think senior citizens sometimes do not exactly know the process that they need to follow to buy a policy. Whether I talk to an advisor, whether I go online, especially in the today's era when a lot of policies get sold by digital means, it becomes a little difficult, especially if they are not exposed to digital means earlier. But with increasing internet, and I do see my elderly parents using internet very often. So I think that has been becoming a less of a challenge so far. But of course, these are some of the major concerns they face.
So, sir, a number of specialized policies for senior citizens have now become available. So should they first try their luck with the normal health insurance policies that are available in the market, or should they apply for a senior citizen specific policy right away?
I think, first of all, this applies not just to senior citizens. People in general must buy a policy before they become senior citizens. I'll prepone that. And now if they haven't bought and now they are senior citizens, policies do have restrictions. Some policies allow maximum entry age at 65. So if somebody is 60 or 61, they could try and buy a regular policy itself. Many policies do not allow somebody to buy it for the first time when they are above 65. But specialized policies come in there to help. Some senior citizen policies allow people to buy above 60 or 65 all the way up to 75 or 80 years also. So those policies, so first consideration is, am I even eligible by virtue of my age to buy a regular policy or not? If I am, I should take it. If that choice is not even available, then I have the only choice available, which is a specialist senior citizen plan. The second point is, try and compare, if these both choices are available, try and compare the benefits. And when we say benefits, more is not always the better. Look at what gets you the maximum value. If you have certain health conditions already, look at pre-existing waiting period. The shorter, the better. If you don't have any pre-existing conditions, practically that pre-existing waiting period is immaterial to you, right? Look at other aspects like servicing, track record of the insurance company. Now, some of these figures are publicly available by IRDF. For example, settlement ratios of a company. Has a company been profitable or not been profitable? Is a company been profitable or have been consistently loss-making for many years, right? Insurance companies, health insurance in particular, is a very high gestation business. It takes 7 to 10 years or perhaps more to start generating profits. So that may not be the only factor to look at, right? But certainly, then look at brand. People trust brands. A very new company versus very established company, people intuitively gravitate a little towards established companies because they have done good work and service. Because if they have not done good work for decades, they wouldn't survive. These are some considerations. Now, specialist policies also offer health checkups. Is there a 2-year, 1-year waiting period? Is it available at renewal or is it available on day one? Makes a difference. So that's something that senior citizens could use it very effectively for monitoring of their health. Other benefits should also be carefully analyzed. Benefits which are not consumable by seniors or elderly should not be paid any too much of importance into. Because remember, every benefit in a product is priced for. Nothing comes free in a product, and seniors must realize it. Upfront, it may appear to be a benefit which is coming complementary, but none is actually complementary. Every benefit adds. So be careful about knowing your needs first. Need a good high sum insured for inpatient treatment. Look at, are there restrictions, copays, are there limits on room rent, doctor charges, etc. Because this will harm at the time of claim if they are there. Look for restrictions and waiting periods. If somebody has pre-existing, shorter the better. These are considerations seniors must have.
You explain the concept of copayment because that is a very important consideration in senior citizens policies.
Yes. Copayments are, very simply speaking, a share of the claim amount that the insured has to bear, and the balance is borne by the insurance company. An example could be a claim is of ₹1 lakh. If there is a 20% copay, and assuming that the entire 1 lakh is payable, 20,000 is something that the insured has to bear, and only 80,000 will be paid for by the insurer. But that's how copay works. That's a very important question because many senior citizen policies come with copays. While copays reduce the premium upfront, but at the time of claim, it comes back to pinch the consumer. A 20% copay, imagine on a 5 lakh claim, is ₹1 lakh, which might be even higher, much higher than several years of premium for a senior. So while you're looking at policy, look at value, not just buying the cheapest health insurance available to you. Because at some point, it should not come back and hurt you when it matters the most, when the vulnerabilities are high, when the near and dear ones are in the hospital, restrictions, room rent restrictions on doctor's payment, anesthesia, OT charges, copays, etc. come back. And if you're buying a policy with copay to bring the premium down, see if you can buy the lowest copay option so that it doesn't hurt you at the time of claim. Last but not the least, look for options where you have choice to increase or decrease copay, either at the point of buying or at point of renewals. So that today you might look for a cover which is at a certain price bracket, but next year at renewal, you think that you can afford more, you should have an option to reduce the copay. Right? So these are some of the considerations again.
So how much is an okay kind of copay to go for? Is 5 to 10% okay? What should be the upper limit for most people? Because
I
reducing the premium is also a very important consideration for our customers.
Yes, it is. Yes, it is. My personal recommendation would be a copay of maximum 20%, but most appropriate would be 10%. 5% is too less a copay to even bring the cost down significantly. I am better off without that 5% copay because it doesn't accrue much of a discounting on the premium. So appropriate would be maximum 20, 10% more commonly is what I would recommend.
So could we talk about the restrictions that are there on room rent, ICU charges? Sometimes there are even restrictions on specific procedures. Could you explain for our viewers what these restrictions really mean in actual terms?
The restrictions basically mean there is a limitation of either is a amount or by virtue of a percentage of the sum insured, which the insurance company will pay maximum towards a certain service or a certain treatment. That's a restriction. How does it work? A policy may have maximum 1% of the sum insured available toward room rent and 2% towards ICU. I'm using it as an example. And imagine if the sum insured is 5 lakh rupees, that means daily room rent could be 5,000 maximum and ICU charges could be 10,000 maximum, right? And if we avail a room which costs 10,000 rupees instead of 5,000, proportionately my claim will reduce, which means my claim, if I have made of 1 lakh, will be proportionately reduced by half. Because I was eligible for 5,000, but I have taken a room rent which is twice that amount, which is 10,000 rupees a day. Same applies for ICU as well. Some other restrictions are, there could be restriction again towards maximum payable towards doctor charges. The balance insured has to bear. Some other common restrictions are copays we have already discussed and treatment restrictions, especially in some, and this is very important for seniors to consider this while buying. Common procedures like prostate surgeries, cataract surgeries, joint replacement surgeries may have restriction in certain policies. Now, who use these treatments more often? It's the seniors who need cataract surgery very often. It's one of the most common procedures. A prostate surgery, very commonly found in seniors. A joint replacement, you'll find much more prevalence of joint replacements in seniors. And if they have restrictions, are those restrictions appropriate? If a restriction on joint replacement is 2.5, 3 lakh rupees per joint, maybe it is adequate. But if the restriction is up to 1 lakh rupees, then I might have to compromise in the kind of implant I use, or the kind of facility, or the type of hospital that I access. So be careful about those. Same is the case with cataract surgeries as well. If the amount restricted is too low, I may not be able to afford for my cataract a good quality lens. So carefully pay attention to these. What are these restrictions, and are these restrictions looking far too restrictive of my choice of quality of healthcare, quality of doctor, quality of equipments, etc.?
So could you elaborate a little on the waiting period for pre-existing diseases? Just as you explained on room rent restrictions, etc. If you could talk a little about the waiting period for pre-existing diseases and what to do, what not to do there, what kind of choices to make.
Sure. Now, it's again a very important one for senior citizens of the nation, specifically because we do have fairly high prevalence of diabetes, hypertension, thyroid diseases, and other chronic conditions in senior more often than in younger individuals. So it's much more relevant in this segment. Almost every health insurance policy in the country has a pre-existing waiting period. Maximum permissible waiting period for pre-existing conditions is 4 years, and that's regulated. It cannot exceed 4 years. A lot of people ask this question and they confuse that if I have a pre-existing condition, that means for 4 years claim is not payable, and after 4 years it is covered. Broadly speaking, it is right, but the problem comes, they feel that I don't have to tell this to an insurance company. If I have any chronic condition, I don't have to tell it to the company, but because it is covered after 4 years. And that's a very, very fallacious view. Every chronic condition or any condition that I have, I must inform the insurance company, because they will have to, what we call as, run the process of underwriting, which simply speaking is evaluate my risk and make a decision whether to offer a policy to me or not, and at what terms. They might ask for a little extra premium for me, might exclude certain conditions for certain durations, maybe. So look at the policy. Is the pre-existing waiting period long or short? A 1 year, 2 year is better for somebody who has pre-existing condition vis-a-vis a 4 years. But imagine a person who does not have any other pre-existing condition and is completely healthy. That waiting period is irrelevant for them, right? The second question I get a lot of times is, what is pre-existing condition? A pre-existing condition, like I said, the regulator has mandated that maximum waiting period on a pre-existing is 4 years. Similarly, the regulator has a condition of look back. Anything that happened the 4 previous years before the first policy I am buying with you is the period. If something happened within that, it is called pre-existing. Now, something happened is what? Either I was diagnosed, or I had some treatment, or I was advised certain things medically, or something happened long time back, but I am under a follow-up. Example could be somebody had a cardiac event, let's say a heart attack 12 years back. But since then, that person has been regularly being follow-up. I was diagnosed with diabetes maybe 20 years back, but I'm taking medications regularly. That means it's still pre-existing. These are important to understand, because consumers, especially elderly, need to understand that what is a pre-existing condition and how much maximum waiting period. The last point I will make is, today there are riders available or specialized products available specifically for some diseases like diabetes, hypertension, etc., where if you opt for the rider, the waiting period for diabetes, hypertension, and their complications is reduced to 0. That means it's covered from day 1 also. I would recommend any senior citizen buying a product for self, elderly individuals, must look for availability of such riders, so that if I have diabetes and hypertension and I can get a rider which gives me day 1 coverage, it is wonderful. It's a good situation to be in, because it's very difficult to predict any complication or hospitalization that may be driven by a diabetes, hypertension, or some other condition in near future.
You emphasize the fact that one should reveal all pre-existing diseases at the time of applying for the policy. So would you have any other advice for people when they're applying for the policy?
One common mistake we do across is we don't look at the policy wording ever. And we look at it for the first time only when we are faced with a claim. My recommendation, and I strongly urge and request every individual buying health insurance, it is available on the websites of companies. Look at the policy wording and what to look for. Large part of the policy wording is today standardized by the regulator. So the definitions are standardized, exclusions are standardized. How the policy wording sections have to be aligned is standardized. But look for things like the benefit section. The benefit section, how is it written? I know that there are certain products available in market where the benefit section is written in plain, simple, colloquial English that everybody could understand. And there are no jargons, no legal terms. Compare that to a policy wording that runs into 60 pages and is heavily jargonized and heavily legal language is being used. Why is it important? Policies which are best and easily understood are easily used and best used, and consumer can drive the best value. Where they understand what is covered, they understand what is not covered, they understand the process to make a claim as well. Removes ambiguity at the time of claim. Remember, health insurance policy is as good as the claim experience that I get. That's the only moment of truth. And a very simply written, clearly written, easily understandable policy wording is one of the most important factors to remove any ambiguity at the point of claim and make it very seamless experience for a consumer.
And I suppose there are higher tax benefits also available if you buy a policy for senior citizens. How much is it?
You're right. Specifically for senior citizens above 60 years, it is up to 50,000 rupees tax deductions available under Section 80D, which is much lower when you look at younger individuals.
Thank you so much, Dr. Mishra. It was a pleasure. You have explained things very nicely for senior citizens. I'm sure that a lot of our viewers who will watch this show will gain immensely out of this interaction. Thank you so much.
Sanjay, pleasure talking to you as always. Thank you very much.